NASDAQ, a brand new high, over 6,000. Got to be some confidence somewhere. And I know there is, at least in 2 cities in the, maybe 3 in the United States, and that's in Las Vegas, where my king is, with about 100,000 plus broadcasters. Of course, we didn't make the trip because we're starting to sell the Miami Dolphins football. And, of course, Charles Moskowitz in Boston, and Comrade Connolly, who is our Russian oil expert. How are you, Comrade Connolly? Oh.
Well, other than I've been called a lot of things, but that one might be the biggest insult of all.
Yeah. Holy smokes. All of a sudden, they were saying that everything depends on Russian oil, and it's like, who cares? It's
Yeah.
So how you guys doing in lovely Houston?
Well, we're doing fine, and I will remind everybody, when we talked 2 weeks ago, we were at $53, and you asked me which way I'd go. I said short, and I still firmly believe that until we see something come out of OPEC, because what I can tell you, and I have now verified these numbers with my guys out in the field, we are more than likely going to be at 9.5 million barrels a day by August 1st.
Yep.
So we will have totally recovered and exceeded our daily production from the boom when the crash occurred in 2014. We will be back at those levels by August.
Yep, and as Tim Connolly mentioned, right here, we are at 49.04 right now for oil, and Brent crude is at 51.52. So exactamundo, as you predicted, my friend. That's amazing.
Yeah, unfortunately, in a way, it's good for our business because people get so optimistic once it hits 50, and I keep hearing all these people, yeah, we're doing our numbers at $70. I went, oh, good. Let me know how that turns out.
Yeah, right. But, yeah, $80 oil. Oh, yeah, I'll take that.
I'll take $50 oil. We make money at $50 oil. If you're efficient,
there you go.
Don't get too crazy, and don't do those things that people get big fixed costs and big fat salaries and all that. In our company, we eat what we kill. Everybody's incented. If we make money, everybody makes money. If we're busy, we work. If we're not busy, we take a day or two off. But these companies with these big overheads and huge, I had someone bring us a deal last month, and they've got 20,000 acres of 3D all over Texas and Louisiana, and all they need is $5 million to study it for the next 3 years.
Well, that sounds good. Hey, if you've got the $5 million, I'll take it. I mean,
yeah.
But are you kidding me?
I'm not kidding you. It's 2 geologists and a couple of exploration guys, and they just need $5.5 million to do it for 3 years of analysis and identifying where you will drill. You hadn't drilled a single oil well then, but you know where you're going to drill.
Which truck did they think you fell off of?
Oh, Lord. That's why there's just still a lot of naivete out there. The big companies are getting money. The mid-tier to the big companies are getting money. The small independents are not. And the days of the big institutions coming in and funding a bunch of overhead and a bunch of high salaries are just over. Every one of them we talk to about project financing says, you need to make the project cash flow, and then you guys get your salaries out of that.
Yeah, wow.
And
well, it's very interesting you say that, because I do have a couple media stories here. Netflix is, remember they made a big splash, was it last year, that they're going to start producing full-length movies and stuff like that. They lost a few mil. Well, they lost several mil on this movie that they made last year. See ya, aloha. That's the last time they'll do something that stupid again. And the other big news, seriously, involves a company out your way, Tim, and that's iHeartRadio, Clear Channel, which is in real deep trouble. I mean, they've been trying. They're $20 billion in debt. and trying to scramble out of that, and I'm not sure they're going to be able to do it. And another one out your way, Whole Foods, could be taken over by the Mormons. It looks like Albertsons is going to take over Whole Foods. So,
something needs to happen because Whole Foods needs a sanity check. The few times that I've gone into Whole Foods, they're incredibly expensive, have small selection, and it's all this whole thing about eating healthy and organic and yada, yada, yada. And I went in there, and I knew they were in trouble in Texas, even they're founded in Austin, right?
Right.
But you go in there, and I went in to I wanted biscuits, and I wanted this particular brand of canned biscuits that I love. And when I went and asked for it, the manager gave me a withering look and said, "We don't sell canned biscuit products." Oh, well, pardon me for being a customer.
Yeah. Well, and it's funny, my wife was joking that, the joke out there is that Whole Foods stands for whole paycheck.
No doubt.
Oh,
no
man.
doubt.
Oh.
So there's, every business sector has its excesses and every business sector has its successes, which we all enjoy seeing. But, man, I think Whole Foods is more on the suck side rather than success side.
Yeah. Well, they're in trouble now. I mean, they really expanded quickly, as did Clear Channel. The big difference between Clear Channel and CBS is that, of course, there's no more CBS anymore. They merged with Entercom. But CBS is in the major markets. Clear Channel
That's exactly it.
Only has a few stations there.
You're dead on. The Clear Channels are all smaller markets, and those smaller markets have gotten less and less valuable over time. And
well, now you're getting personal here. Oh, because I'm in one of those smaller markets. No, I know I know exactly what you're saying.
Of course, Mike and I, we were on the air in small markets everywhere. We were on Time Warner's cable system, one of the very earliest talk shows that got carried on cable. And we were, ostensibly, we were told as part of our agreement with them that we were on 1,100 markets throughout the United States. Well, every once in a while, I'd have to toss out a question during the show. We were Sunday nights, Mike, remember? Yep. And I'd just toss out a question. If anybody's there, please call us.
Yeah, and you had 3 listeners, right, on 1,100 systems. Oh, my God. When was that? Because Mike's been here for, 10 years or so. When was that?
Mike and I were on the air together for 18 years.
Wow.
We started together, Mike, I think it was like somewhere in the mid-'90s, wasn't it? And then
yes, that's a long time, 20 years ago.
I dropped it at the end of 2013 because I was getting so engaged in the oil business and I couldn't spare the time anymore. But I really enjoyed it. We had a lot of fun, and over time we did get some good stations. We got picked up. We were on CBS Radio. We were on a variety of other outlets that we got some really good exposure. It was a lot of fun. That's why I enjoy being on the air with you guys.
Well, it was very interesting because I'm gotten a lot of feedback on this show, and people just, love to hear you guys because they don't hear this stuff anywhere. It's really amazing. Charles and Mike bring the various sectors, whether it's medical or research, and of course you're on the oil side, and it's all stuff that CNBC doesn't have, and neither does Market Watch, really.
Well, it's certainly something that I enjoy both listening and learning on this show from you guys, and on being able to share things that are the real stories from out in the market, not what you hear from the talking heads on Squawk Box or, the whatever agenda they're particularly trying to sell that day or not. It's a lot of fun going out and getting facts and disseminating them in my book.
No.
And it's just like, the latest thing now. Remember we were talking about how overpriced the Saudi IPO appeared? Yeah. And the King has been trying to sell it at a $2 trillion valuation. It just came out overnight. None of his advisors can sign off over $1.5 trillion, and no investment banks want to even buy the $1.5 trillion.
Really?
So, yeah.
Oops.
the initial round of valuation that the investment banks did was under $1 trillion, and the king wanted a $2 trillion valuation.
Okay, so what's going to be the outgrowth of that then in his world?
Well, the Saudis just lowered the taxes on all production agreements from 85% to 50%. And essentially they did it for themselves because they control everything in Saudi Arabia. And so by eliminating that 35% of taxes, that's what got the valuation up from below $1 trillion to $1.5 trillion. But, you know, if the government can take it away and give it back, who knows what that means for shareholders in the long term. But I'm sure there will be retail investors standing in line to buy it whenever it does go out. But it's going to be a high-priced stock.
Wow. Yeah, that's amazing. That is truly amazing. Well, okay, you told us a couple of weeks ago where you thought, you know, things would be, and that's a little short. What about looking ahead a few more weeks?
Well, I'll give you a couple of interesting data points. One, we are seeing a great deal of stability in natural gas, with oil having had this volatile, 54, 55, 47, 48. You're talking about nearly a 20% factor over a period of a month. Natural gas has a 5-year chart that stays between 3.25 and 265 and has not moved at all over this whole period of time. And it's beginning to cause me to start looking more carefully at the natural gas producers. And I don't have anything yet. I've just started analyzing these charts. Mike and I talked yesterday, and I promised him some more data together today, and I didn't get it all done. But I think I'm going to be looking for producers long-term who benefit from a stable price environment in natural gas. And that'll be not just producers, but users, the people like the people that are the manufacturers of plastics, and Exxon with their new plant there in South Texas, and Dow's new expansion in Freeport. If we see that kind of stability, those businesses are going to do well over the next 5 years.
Well, and you think about Florida Power and Light, all of their new plants are natural gas plants that are coming online. Of course, ironically, they've got this huge solar side of FPL, which Indian River State College is involved in educating the workforce. It's going to be a minimum of 1,800 folks coming online in the next 3 months, and they'll continue doing that for about the next 5 years. So, yeah, and that's the solar side.
And yet, without the subsidies, while solar is dropping, it still is a problem. It's a problem. So it'll be interesting to see what that long-term look is, because many states are now dropping their subsidies, and I don't think the federal government, in this budget environment, we're not going to be seeing a whole lot more alternative energy subsidies.
Ooh.
I'd bet hard money on that.
Ooh, you're breaking news again there, Mr. Connolly.
Well, these are guys we talk to at least weekly, if not daily, and they're telling us that the alternative energy stuff is on nobody's priority list with an R after their name in the Congress.
Does that stand for ripoff?
If they got an R at the end, they ain't voting for alternative energy stuff.
The R for ripoff. Oh, no. Oh, you mean the other R. Oh, man. Unreal.
Of course, here's our biggest problem. Here we control the House, the Senate, and the White House, and we still can't get along enough to approve a budget this week.
See, that's,
that is dysfunctional.
And I'll tell you, I was really bummed this past week because the guy that was leading the Cal exit movement to leave the United States left the United States. He moved to Russia. So anyway, I'm not sure. I was thinking it's either going to be California or Texas that'll leave the U.S. first. But just think about that. You can get a lot of foreign aid if you were a separate country,
No, they'd be wanting it from us.
Yeah, yes.
People would be asking Texas for foreign aid for Ohio and New York.
Well, the one thing you are taking big time is a lot of Northern California tech companies. I mean, Austin, Texas is going absolutely bonkers.
No, we're getting a lot of transfers here from California for two simple reasons. One, incredibly lower cost of living. Salaries are about, on average, 55 to 60% here of what the average is in California. And then B, real estate. Those guys come there with their $2 or $3 million they made out of their 2-bedroom, 2-bath San Francisco, bungalow, and can't believe they could buy 5,000 or 6,000 feet in Austin, Texas, overlooking the finest lake view in the state. I mean, it's a different economic environment.
Yeah, it is.
How about tax considerations?
Well, Mike, yeah, we don't have an income tax, but Texas does have a very high real estate tax structure. And right now that's okay because you can deduct it. But I'm also hearing some very significant rumbling that we already have an alternative minimum tax structure that maxes you out on what you can take on writing off your real estate taxes. And, there's some talk about in the new bill to maybe do a 20-year phase-out of the deductibility of real estate taxes. And if that happens, that would damage states like Texas. We would more than likely have to we'll never do an income tax, but we might do a statewide sales tax.
Wow.
Ooh, really?
Yeah, it could happen, which frankly I wouldn't be too upset about because I pay such huge real estate taxes. So it wouldn't bother me if I saw my real estate taxes go down and had a sales tax, because that way you catch all the drug dealers and all the people that work for cash and don't pay taxes. At least you get them on the consumption side.
Wow. Yeah, that's
better.
Yeah,
Yep,
and Mike, Nevada doesn't have any state taxes either, do they? Or
Right.
Yeah. Yeah, well, Florida is actually talking about instituting one, because I don't know.
You have a very high sales tax, so 8.5%.
Ooh, ouch.
You're looking at almost 10% when you buy something.
Wow, I didn't know that. Holy smokes.
Well, and when you check out of the Bellagio, it's like 22%.
Well, somebody's got to pay for the Raiders.
Got to get the money one way or the other.
All those hotel and convention taxes, it's unbelievable. I mean, I think it's 22 or 22.5%.
Yeah.
When you go to checkout, it's like, okay.
A quarter of your bill just goes to taxes. I love it.
Exactly.
Oh, my God. Yeah, but that's very interesting. You're talking about that with Texas because, obviously you just seem to be so business friendly. I know, our governor here in Florida talks a lot about, the main competition that he sees for Florida is you guys.
Yeah, sure. And we have lots of programs to incent companies to come here, and if they bring certain numbers of jobs. And the thing about Texas incentives, though, is we have give-backs. If you come to Texas and say you're going to create 500 jobs over the next 5 years and you don't do it, you got to give back your incentives.
Ooh,
whereas some of these other states just give them the money and trust them.
Well, yeah, and then the companies go out of business before you can. Yeah, we got nailed on that here in Port St. Lucie. Yeah. Oh, yeah. Interesting. Give-backs. I like that. That kind of evens the playing field.
That's it.
Wow.
Well, Mike, I haven't heard you talk much about any stocks today. I know we've talked a lot about energy, but right now, as I said, I'm more or less neutral until I can figure out this natural gas phenomenon I'm seeing. But what do you see out there that's worth investing at 20,000 Dow?
Well, I see really a tremendous bull market, which should accelerate until Friday and make new all-time highs, of course, across the board. We already made it in NASDAQ. But there's so many companies that could launch bullish moves. Stocks like quality stocks, like 3Ms, like CHD, which is Church and Dwight, companies that people don't know much about, that have great fundamentals and have been forgotten.
Mike, what was that last company? I've never
Church
heard of
and
it.
Dwight.
Okay, who are they? What do they do?
CHD, the consumer durables. They have a lot of products on the supermarket shelves.
Oh, okay.
And they're a dividend payer, too, aren't they, Mike?
Sure.
What are they, about a 3.5%, 4% dividend?
Yes. It's excellent.
Yep. Yeah, I've owned it in our pension plan for quite a while. Yeah, that's the things that's hard to find now, and yet the bond market doesn't believe that we're heading into a booming economy. And there's this very fundamental difference. Here we are at the 10-year at 2.3%, and so the bond market's not buying that we're going to have 3 or 4% growth this year. And that's what is the dichotomy that's toughest for me in buying anything today. I always gravitate towards dividend stocks, but I have to be worried about what happens to them when we see interest rates rise. And I'm beginning to wonder, are we going to really see rates rise much more this year? I thought we would see 3 or even 4 raises this year, but the bond market doesn't believe it.
Well, I think the Fed is right to leave things alone.
Yeah, you're right.
They will blunt the rally. Every time they speak, the rally stops moving.
Yeah. Well, and plus you're looking at GDP, looks like on an adjusted basis, 9/10 for the last quarter? And that's dramatically less than anybody expected we'd be seeing. So, while we are seeing a lot of regulations getting withdrawn from Trump, which has been great, I think 32 is the number I saw as of yesterday, more regulations rescinded and executive orders issued in his first 100 days since FDR. So he has gotten some stuff done. But I just don't think that's going to translate into an economy at 3 to 4%, or if it does, that takes a while. That takes a while.
3 to 4% is a lot. Let's
huge.
Get to
we haven't hit
first.
We haven't hit 3 to 4% in years. Was it in the Bush years we last hit 3 to 4%?
So if we got to 3 or 4, we wouldn't have enough employees to go around. There's a shortage already of skilled labor.
Yep, you're right. We're absolutely seeing it already.
Eric Bauer.
Welcome, Eric Bauer, COO of RMS Medical Products. He's done a great job with this company. Here's a company that should go to $1 from 44 cents.
Wow.
And I want you to listen to Eric Bauer.
All right.
And I'm going to let you gentlemen have the rest of your show. And as always, thank you for having me on. And
You're
Eric,
welcome.
you're in good hands.
All right, Timmy.
Right, thank you.
Timmy, we'll see you later. All right. And Tim
Thanks,
Connolly,
guys.
our oil expert, and man, he's constantly breaking news here on the Money Info Show. And has he been right on the money? There's no doubt about it. Well, Eric, back again. And boy, I'll tell you, the phenomenal first appearance on this show. Of course, RMS Medical has been here for about 10 years on talking about RMS Medical on this show. So take it away. What's new?
Well, thank you again for having me back. I'm excited to be here. And I think it was Mike who commented about the stock should go from where it is today, from I think about 45 cents to $1. I think you're selling us way too short. I'm looking at $5 growing to $10 a share.
Wow.
I'm very excited about this company. I think that this company is way underrated in terms of its stock value today.
Well, Tim Cook is saying maybe you could go to $300 or $400.
Yes, I agree.
You wouldn't mind that.
No, I'm very optimistic about the future of this business. I'm excited to be here. As I mentioned to you the last time I joined you, I joined the company back in January. And since I've been here, I've seen nothing but great things. We are working on an incredible number of things to move the company forward. And we actually just had a press release this week, and you asked about exciting news. Well, we had the FDA just renewed our CFG. CFG is a certificate to foreign governments, and in case people don't know what that is, it's a document that the CFG gives you, or that the FDA gives you, that you can provide to foreign governments in Asia, Latin America, all over the world. And this document basically certifies you by the FDA. It says that your products are cleared to be sold in the U.S., that your company meets FDA regulations such as good manufacturing practices and quality system regulations. It's kind of a blessing by the FDA to sell your products in other countries. Many other countries don't have an FDA, so they they look to the U.S. FDA to evaluate companies, to ensure that companies are following good manufacturing practices, and kind of bless their products to be sold in their countries. And this is important to us because I think there's a misperception out there that RMS Medical Products is just a U.S.-based company. And it's not at all true. We're very much a global business. We source products, raw materials from around the world, and we have sales teams selling around the world as well. So our products, which are made here in Chester, New York, end up in Germany, they'll end up in Russia and Asia and just about everywhere in the world. So we are very much a global business, and having a CFG from the FDA is critical to our business in terms of continuing our expansion. Now, we've had a CFG for going on 20 years, but they just literally renewed us last week, and this new CFG that we have will allow us to expand our business throughout Asia and to many other countries in Europe and Latin America and the Middle East. So we're very excited that the FDA continues to support us and provide us with this sort of a document so we can expand our business even further.
Yeah, when you mentioned that there aren't all that many FDAs around the world, I mean, you don't hear of many like that. I think, Britain and Aussies, they've got them, right? But that's really about it, isn't it?
Yeah, I think that's it. In order to be really good at this, you have to be able to audit companies. You have to be kind of really stay on top of things, and a lot of these countries are too small or don't have the the sophistication to do the auditing and the follow-up and to build all of these quality systems. And so they look to our FDA to do that for them, to make sure that the products have the proper clearances in the U.S. and that the companies are following all the proper regulations. And they know that if the FDA blesses you and gives you one of these certificate of foreign governments, that basically says that if you can sell your products in the U.S. and you're following all the U.S. regulations, they don't need to go any further than to agree with the FDA. So it really is a requirement for companies in the medical device industry to open up doors in all these foreign countries. So this was, as I said, we put this out in a press release yesterday, and just to let everybody know that we've been renewed by the FDA, and we continue to expand our business on a global basis.
So how are you in trying to find a new headquarters? You had mentioned that you had started looking.
Yeah, we're looking for a new building because we've outgrown the building we're in, and it's tough. It's very difficult to find a new building that either we're looking at buildings that exist, and we're also looking at locations where we can actually build a custom building. And it's very hard to find a building that exists today that's ideally suited for the nature of our business, where we have clean rooms and a very clean environment, and we need to have warehouse space and pick-pack operation. And so we have a very defined need for our business, And it's very tough to find an existing building that is the right size and has the right features, is located in the right location, that has access to major highways. So we are looking at all options. We just haven't been able to find the right building. And now we're also, as I said, looking at empty lots where we'll be close to some of our key suppliers and be able to potentially build a custom building that will be exactly what we need for the environment in which we manufacture and ship product.
Eric, would you do you also need like rail spurs and or be near an airport or no?
No, we don't have any need for rails. Most of our products coming in and going out are all brought in by UPS or FedEx.
Oh, okay.
But being located near one of their locations is helpful, and also being located near one of our critical suppliers is helpful as well. And being located on a major highway so people can get to us and we can ship things out is very helpful to our business. So we can't really be in a rural location kind of in the middle of nowhere. It just doesn't work for us.
Well, I was going to ask you, where do you normally, especially if you're shipping to Europe, where do you ship out of? JFK?
Well, we utilize both FedEx and UPS, primarily UPS, and they take our products. So it doesn't really matter where they're taking the product out of. You know, they route things through whatever way they feel
That's
is
true.
the
Yes.
most appropriate way.
Yeah, that's interesting. Yeah. Wow, that's amazing.
So they're one of our major suppliers, and they do a great job for us.
Yeah, we've been a FedEx client. Wow, well, we're starting our 25th year here in Port St. Lucie next Monday, and we've been with FedEx ever since. They're phenomenal. They really are. I don't know how they route stuff.
Wait till you can do it on an Amazon plane.
Yeah,
Yeah, Amazon.
Or a drone.
Amazon seems to be taking over the world, I think.
Well, and what is the